Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenevec on Bloomberg Radio.
I mentioned trade certainly front and center, and it's front and center for markets because President Trump threatened a 35% tariff on some Canadian goods. He also raised the prospect of increasing tariffs on most other countries, ramping up his trade rhetoric and comments that weighed on stocks and boosted the dollar today. Separately, our Bloomberg News team was the first to report that Vietnam's leadership was caught off guard by the president's announcement of a 20% tariff. That's according to people familiar with the matter, and that the country is looking to negotiate down that rate. Josh Wingrove is a part of the team that had the exclusive. He's Bloomberg News senior White House correspondent. He joins us from Washington, D.C. Josh, I want to start with this Vietnam story because the president announced last week that Vietnam had agreed to a 20% tariff. Did this come as a surprise to the leaders of Vietnam?
It seems to have come as a surprise to them, and it seems that this deal that the president announced is actually maybe a little bit closer to these tariff letters in that there's a unilateral element to it. It looks like the Vietnamese were hoping for a number, several points below that one, and the number 20 caught them off guard. Our colleagues there saying that this deal, or if we're calling it that, this announcement of the president, the U.S. president, has not been amplified by Vietnamese state media particularly heavily. So it remains a little bit unclear. Now, remember, this is the only deal with one of the countries that was facing a potential tariff hike this week, about the nearly 5 dozen countries. He also has sort of a framework deal with the UK itself, had some questions. And of course, they've got that deal with China to essentially keep talking. So, the deals just really aren't materializing. Now, Trump himself has said he's not particularly stressed about that because he simply wants to set unilateral rates anyway. So whether he'll do that or not, we will see. But there have been a lot of developments here on trade this week in the past 48 hours or so. But the Vietnam one is a reminder that even the things that they do announce as deals come with all kinds of caveats on them.
Definitely a lot of news that we're getting this week as it pertains to tariffs. But Vietnam here, can you just put into context here for our viewers, how big of a trading partner are they for the United States?
They're a major trading partner in the United States, and they were sort of a bellwether because there have been long-standing, and I mean pre-Trump administration and bipartisan concerns about what's called transshipment, essentially the Chinese routing stuff through Vietnam to get around whatever tariffs are applied to China. So they were sort of a test case. Hey, how are you going to deal with this? And what Trump announced was essentially a double tariff for trans-shipped goods and this 20% rate for all other goods. And that, there was still some questions swirling about that, including whether, it would include sort of roll in previous tariffs or not. And the Secretary Bessent was asked about that earlier this week. But it really does look like it's, let's say, more fluid than not. And so that, of course, hangs in the air as we look forward to these China talks. Secretary Bessent, Lutnick, USTR Jamieson Greer, we're expecting a new round of China talks, they said, early next month. But it also looks like Bessent and Lutnick are going to Japan, where they could perhaps cross paths with the Chinese or even pick up the talks with the Japanese, which themselves are having problems right now in those negotiations. So lots of moving parts here right now. But remember that market shock on April 2nd when President Trump announced these Liberation Day tariffs, initially rolled them back amid that market fallout about a week later. Right now, we're sort of barreling towards another Liberation Day in a few weeks.
And we're going to be speaking to Ann Milletti exactly about that point, Josh. As some folks have said, it doesn't seem like the markets are really taking that August 1st deadline seriously. You said there are a lot of moving parts here. Certainly just in the last 10 minutes, we're getting another headline that the U.S. is working toward an interim trade deal with India that could reduce its proposed tariffs to below 20%. This, according to people familiar with the matter. And it puts the South Asian nation in a favorable position against its peers in the region. Our Bloomberg News team reporting that. Back to Vietnam, though, because you and the team on this story reporting that Vietnam is looking to negotiate that 20% lower to maybe the 10 or 15% so level. How exactly would they do this? Like, what do you think the president wants to see, and what concessions could Vietnam make?
your guess is as good as mine, because the way President Trump has announced it, and again, we don't know that the Vietnamese agreed to this, was that they agreed to open their market to U.S. goods, full stop. And therefore, that's kind of what he's looking for. It's hard to imagine offhand what kind of other carrots they can put on the end of that stick. Now, of course, they want a lower rate. Trump has really not been, horse trading. There's not really been an indication of that. And you mentioned in the top about this sort of musing about setting a higher floor. That is one of the biggest questions I had this week. He told the NBC yesterday, hey, we're looking at maybe 15% or 20%. We don't know whether he meant just for these countries, about 5 dozen, the ones where the U.S. has a goods trade deficit. Is he talking about those, the ones that have been paused at 10%? Are they going to go up 15? Or is he talking about everyone? He's talking about every country, including ones where the U.S. runs a trade surplus, including ones that are like friends, like Australia, the UK, that kind of thing. And if that's what he's talking about a very widespread increase. And not to drone on too much, but last night we had the Canada development, that letter on to Canada saying he'd raise the rate to 35%. Really important caveat here. Right now it's a three-tiered system for U.S. tariffs on Canada. 25% for a lot of products, 10% for some energy products, and 0% for USMCA compliant goods. That's Trump's reworked NAFTA from his first term. We are told that the 35% rate is poised to be applied only to that 25% rate. The 10 would stay where it is, and the USMCA would remain with its carve-out as of now. That's the expectation, but our sources cautioning us that this is a fluid situation, and as we know with Donald Trump, anything's possible. But the Canada one also came a bit out of left field last night, but it does look potentially like a more targeted increase of that tariff than perhaps other scenarios where it was sort of an across-the-board 35.
Josh, sticking with Canada here, I mean, of course, this 35% threat for tariffs here would be really huge here for Canada. Is Mark Carney doing enough? How much stake do they really have in the game, and how much progress is President Trump making here?
Carney has been more private in his negotiation tactics than his predecessor, Trudeau, and we'll see. The Canadians, when Carney and Trump met at the G7 last month in Alberta, Carney set a public sort of 30-day deadline that we're kind of coming up against in a week or two. The Americans never said that deadline. They never published it. It's not in writing like the July 9th and August 1st deadlines are. And so it's unclear whether or not they're still trying to reach something by then. Now, of course, Trump has put this August 1st date on there. If all that's happening on August 1st with Canada is that the rate goes from 25 to 35, but other things don't change, it's not clear how Prime Minister Carney will react and whether he'll have much incentive to give stuff in return to try to haggle to a lower rate. I should note, of course, Canadian public sentiment is very sour. People are upset there about how the country is being treated, a major trading partner of the U.S. And so the political push for Carney is not so much to bend the knee and make a deal, but arguably to do the opposite, to dig in and play tough with Trump.
Josh, we are bringing up live pictures of President Trump right now. He's touring the devastation in Canada. He's there with the First Lady. He's also there with Governor Greg Abbott of Texas. I'm wondering about the unanswered questions that you still have. We've gotten quite a few letters this week from the president about trade and about different tariff rates on other countries. You and the team have reported on Vietnam and on Canada. Going into the weekend, what's the unanswered question that remains for investors who are watching this and really for the global investing audience?
I mean, if you squint, you can look at these tea leaves in sort of two completely different directions. One, we don't have details on the EU. The China talks are coming. Potentially that August deadline's extended. This report today from our great colleagues about India, maybe they get some kind of interim deal. Canada comes in smaller than maybe it could have otherwise been. And if all those dominoes fall that way, the tariff barrage coming on August 1st will be more on the smaller end of the range of outcomes. The flip side is if he just keeps farming out letters and doesn't get deals that he likes and starts announcing unilateral deals like with Vietnam that maybe the other countries balk at, then we could just have an August 1st filled with announcements, including potentially if things go sideways with, say, the EU, which has been a very silent issue here. Big bloc, huge trading partner, had been facing a tariff increase. Trump hasn't said a peep, although he alluded on Thursday in an interview with NBC that there might be a letter to the EU coming. So we'll see. I think there's a few sort of bellwethers, the EU chief among them, but we just don't know the scale of the tariff situation that we're walking into on August 1st. I should also note that copper deadline he also set for August 1st, so it's not just the country-by-country tariffs coming on that day.
Yeah, 50%. That tiny economy, the EU's economy, certainly one for us to all focus on. Josh, always appreciate your time. Josh Wingrove, Bloomberg News, a senior White House correspondent in Washington, D.C.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, the markets kind of seem to be taking this tariff news in stride. You heard Josh mention April 2nd and then the pivot just a little over a week later to that extension to July 9th and then another extension. And look, we're just off of all-time highs. And that's really what I want to talk to Anne Miletti about, the question of complacency in the market, as Jamie Dimon warned yesterday. Anne Miletti is back with us. She's head of equity investments and chief diversity officer over at Allspring Global Investments. They've got about $600 billion in assets under management. She joins us here in the Bloomberg Businessweek studio. Is there complacency in the markets?
I think there is a little in certain places. I wouldn't call it broad complacency, though.
Well, what is the difference between what's happened since mid-April and the 25% increase to new records in the S&P 500 versus messaging that we've gotten from the president about tariffs? Because that threat is still there.
I totally agree. The threat is still there. We know tariffs are going higher. I do think investors are a little bit more comfortable that there's a negotiation process going on. So despite the deadlines and changing rhetoric that we get on a daily basis, they know there's some flexibility going on behind the scenes.
So it sounds like you're saying the market is not fully pricing in a hard and fast deadline of August 1st.
Probably not a hard and fast deadline, and probably not peak tariff rates either.
Mm-hmm. Yeah. And when I'm looking at the VIX index right now, we saw it surge up about the 52 handle back in April. And if you look at it now, it's about 16 right now. Yeah. But I mean, of course, people are really looking to see whether or not it'll rise to 20. At what point would you raise an eyebrow and say, hey, the market is really nervous about what's going on right now?
Look, I think volatility can still exist. And I wouldn't be surprised if we woke up next week and we get a sharp rise in volatility because of some announcement that we're not thinking about today. I mean, typically those sharp rises in volatility happen because of something unexpected. The one thing I do have to say that I feel a little bit better about more recently is the breadth that we're seeing in the market. And instead of that broad or that intense, deep concentration in just a handful of names, you're kind of seeing positive performance out of almost all industries in the S&P, and more broadly even down cap. And within those industries, you're starting to see companies with good fundamentals starting to act more favorably. And that's a healthy sign. And it shows that there's, to the point of complacency, I think there's some real work that is being done to really look at company fundamentals and try to position where you want to be for the next, event.
So if you look at the market from New Year's Day to now, it's almost like we're in the same place. So much has happened in between, but we're still flirting with all-time highs here. But that being said, I won't necessarily ask you where are the safe haven areas, but where are the areas for opportunity right now? What are you telling your clients?
Yeah, it's a great question, and it's a question we get asked often, right? So I always think about it as risk versus reward, and I would say from a market cap standpoint, I really like the kind of the mid cap space. So not all the way down to small cap, but that mid to small area. There's still a lot of names and companies that have continued to perform well, especially ones with strong balance sheets, experienced management teams, and companies that can kind of control their own destiny, have a lot of flexibility, even given all the changing kind of rules and things happening around them. That's a sweet spot in the kind of size space. In terms of industries like healthcare, I see a lot of our investment teams taking interest there, but not out of the typical, healthcare services, drug areas. Underneath, if you think about where the next layer of innovation is going to come from, how are we all going to get healthcare a little bit more efficiently and in a new, probably way. There's a lot of companies that are exploring and interested in that area. And then lastly, from an asset class standpoint, I think emerging markets and international space is really interesting here.
Just 30 seconds.
Yes.
Help us look ahead to the bank earnings next week. We heard from Delta yesterday, Levi's yesterday. Solid report, stock higher as a result. Good start?
I think it's a good start. And I think, we're going to see some volatility within earnings. Not all things will be created equally. And this is where I think active managers really do. This is where all the work comes out to play, right? Where, in this environment, some companies really can adjust quickly and others just can't.
Anne Maletti, good to see you. Thanks so much for joining us. That's Anne Maletti, Head of Equity Investments, also Chief Diversity Officer over at Allspring Global Investments.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I want to get to the latest on Russia's invasion of Ukraine. North Korea is now supplying as much as 40% of Russia's ammunition for the war in Ukraine as the partnership between Pyongyang and Moscow deepens. This is according to the head of the Ukrainian military intelligence. Separately, President Trump said he plans to make a, quote, major statement on Russia as the U.S. prepares to send more American weapons to Ukraine. Also, President Trump's special envoy to Ukraine, Keith Kellogg, will arrive in Kyiv on Monday and spend a week in Ukraine. This according to a report from the Ukrainian news site Novinai Live. Nick Wadhams is with us. He's a Bloomberg News national security team leader. He's usually based in Washington, D.C., but he is here in New York. Nick, I want to start with what we heard late yesterday, this, quote, major statement on Russia from President Trump that's set to come on Monday. Do we have any idea what this will be?
We have some suspicions of what it'll be. What we have seen in the last couple of weeks is the president has dramatically shifted his tone toward Vladimir Putin. So whereas he had previously been effusive in his praise of the president and really condemning President Volodymyr Zelensky of Ukraine, he's now shifted and essentially said he's run out of patience with Vladimir Putin over the fact that he has refused to stop the bombardment of Ukraine. So it could be a couple of things. One could be sanctions. He's talked favorably about a bill working its way through the Senate right now.
What's left, though?
Well, the bill would go after sales of Russian oil. So they imposed this price cap that allowed Russia to sell some oil. Basically, they wanted to restrict oil but not tank the oil market. So there is the possibility that they would ratchet that up. So that's the big one. The other is the possibility that he'll really open the floodgates on weapons. So he has not sought more money from Congress in his second term to provide more weapons to Ukraine. A possibility that he'll say, we know he's more favorable toward the idea of sending weapons, so he may say we're going to put some money where our mouth is on that.
But is that politically tenuous for the president, given especially during the campaign, there was this idea that, okay, if Democrats win, we're just going to keep sending money and weapons to Ukraine. There's also this wing in the Republican Party that's like, hey, this is not our war to be fighting.
Well, I mean, it's the politics of it aren't really clear, but you have this sanctions bill in the Senate that has like 85 senators on board, so it's real bipartisan support. And there is a very strong wing of the Republican Party that supports a lot more aid to Ukraine. And then you have the fact that, President Trump, he has said openly, I get to define what America first is, so get on board, and we've seen a lot of evidence that a lot of the MAGA supporters have really been supportive of whatever he decides to do, including bombing Iran. So that's a big question. There are several people, though, including J.D. Vance and Secretary of Defense Pete Hegseth, who have been much more ambivalent about the idea of the U.S. committing more weaponry to Ukraine. So a lot will depend if he does do that on the dollar figure. If it's, a $60 billion supplemental like Joe Biden signed toward the tail end of his term, that would be a very big signal. If it's anything less than $10 billion, I think you'd see that as sort of a hedge by the president.
Nick, so with North Korea supplying as much as 40% of Russia's ammunition, we know that Russia is providing money and technology to North Korea in exchange for these weapons. What chapter are we in right now in the war? How big of an asset is this for Russia?
Well, it's a huge asset. What they really need is a lifeline. They need continuous weapons. They're spending a lot of their munitions. You've seen this uptick in attacks by Russia against Ukraine, drones, things like that. So They are running low, and they need as much help as they can get. Iran is no longer really part of the procedure, part of the process, because they, obviously everything that's happened in the war with Israel and the strikes by the U.S., they're really sort of scraping the bottom of the barrel with North Korea. The challenge is that there is no end in sight there. The U.S. cannot really put any pressure on North Korea, so it is a fairly consistent and reliable lifeline for Russia that it just would not otherwise get, and it's becoming more and more dependent on.
Mm-hmm. So, of course, this has been going on for years, this conflict. And as you mentioned, there's not much more that the U.S. can do. It seems as though there's nothing left here. But really, where are we? How would you describe this time period? Who's pushing ahead right now?
Well, it's really a crucial moment because Russia has stepped up these air attacks, and the weapons that Ukraine needs to defend against these drone and missile attacks from Russia are precisely the things that the U.S. has been sort of waffling on. So the big question now is, if you have this gap in supplies to Ukraine, who fills it? Is President Trump on Monday going to say, okay, we're going to open up the floodgates again and send all that stuff? Or is Europe going to fill in the gap? We do have some indication that Trump is going to be willing to sell weapons to NATO countries, that the NATO countries, specifically Germany, France, the UK, would then say, okay, we're going to send those weapons to Ukraine. So rather than seeing the U.S. do it directly, NATO countries would do it. The question is, can they get there fast enough? Because this air war we're seeing from Russia right now is just really punishing for Ukraine.
The special envoy to Ukraine, Keith Kellogg, set to arrive in Kyiv on Monday. He's going to spend the week there. Could this be finally the beginning of the end of this war?
That's the challenge. There is that Vladimir Putin has shown no sign that he's willing to give up his principal aims, which are essentially he wants Volodymyr Zelensky out, and he wants de facto control over Ukraine. So if Vladimir Putin is undaunted, and you have countries like North Korea, as you guys are saying, continuing to supply more weapons to Russia, what incentive do they have to stop, especially right now when, by all accounts, they are actually in this very slow and grinding war, continuing to make slow but steady progress against Ukraine. So if Russia's not willing to give up, I think that's what you're going to see from the president on Monday, where he's really looking to try to force Putin to essentially start to give up. And unfortunately, though, we just haven't seen any sign that Putin's willing to get there.
But how would he force him to do that? I mean, I know you said maybe there will be additional sanctions. There could be the sanction bill that could actually get through. But apart from that, I guess what I'm saying is I'm skeptical of that working because none of this has worked over the last 3+ years.
Right. I mean, that's very true, and that's something that's on everybody's minds. But I think what you're seeing here is the president try to essentially do a sort of mental shift, as difficult as this would be for Vladimir Putin, where for the last 8 months since President Trump has been in power, the idea has been, okay, Trump is going to be a pushover. He's going to not restrain me in any way. If he does actually start to put up some resistance and really put pressure on Russia, does that change Vladimir Putin's calculus where he decides, okay, now I have to come to the negotiating table?
So during the Biden administration, of course, we did see a lot of fervent support for Ukraine, and especially when we think about resources being distributed. Yeah. Where are we now? How much has Trump essentially poured in? Is he putting the full force behind it as well?
Well, this is really what we're waiting to see. I mean, the big issue is that he seems to have overruled his defense secretary, who imposed this brief pause on sending air defense missiles to Ukraine. So then that really sent a shock through the system, because it was like, well, if it's not coming from the U.S., the Europeans are not in a position to be able to do that with any sort of reliable, long-term, sustained supply. We do now see that Trump has been willing to do that, but the big question again for Monday is, they are running out of money. The U.S., the amount of money that Joe Biden had set aside to send these weapons to Ukraine is not limitless. It's starting to run out. Once that money really hits the bottom of the barrel, does President Trump decide, okay, we're going to re-up this now? Because Europe is just not going to be able to fill the gap with the kind of numbers that Ukraine needs.
Nick Wadhams, always good to see you.
Thank you.
Don't be a stranger here in New York. That's Nick Wadhams, Bloomberg News national security team leader.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Let's talk about shares of Levi Strauss, jumping as much as 12.5% earlier in the session, up about 11% right now. The company raised its revenue outlook. It said yesterday that it expects sales growth to outweigh the effect of President Trump's tariff. Back with us is Harmeet Singh, Chief Financial Officer and Growth Officer at Levi Strauss. He joins us from our San Francisco bureau. Also with us is Bloomberg News Senior Editor Nina Trentman. She writes the Bloomberg CFO Briefing newsletter. You should sign up for it if you haven't already. Bloomberg.com/CFO-briefing. Harmeet's going to be featured in an upcoming issue of the CFO Briefing newsletter. Nina's here in our studio. Harmeet back in San Francisco. Harmeet, welcome back. I do want to start with tariffs because your team said yesterday that the impact of tariffs on profitability, excluding the mitigation efforts, is expected to be between $25 and $30 million through the end of this year. What happens, though, if the high tariff level persists into next year? What happens to that number?
Hey, Tim, good morning. Nina, good morning. It's good to be talking to you guys from your Bay office here in San Francisco. As you saw heard yesterday, we delivered a quarter two beat, and we raised our full year guidance. A special shout out to our teams around the world for what I call delivering the power of the and, which is not only growing our direct-to-consumer business, but our wholesale business, growing our U.S. business and our international business, growing men's and women's, and I can keep going on. And that really explains the momentum we have. We delivered our third consecutive quarter of high single-digit growth and growing our profitability. And that is why we believe that we are stepping into the second half. We believe we can manage through the uncertainty of tariffs. The tariff situation is fluid. We assumed an incremental 10% on tariffs from the rest of the world and 30% from China. Our view is we are competitively in a better spot to manage through this. 60% of our business is international. We have a fairly diversified supply chain, and we've been agile over the years in managing through some of the uncertainties. We've got some mitigation actions, Tim. We are working with our vendors. A large piece of our growth is driven by higher volumes, and that makes a difference when you're negotiating with our tenured relationships over the years. We are driving higher full price sales because our product offers are working, and we are targeting some pricing actions with minimal impact to the consumer. To your question about 26, we are working through that. Some of the mitigation actions will continue. We believe the brand momentum continues. The brand has never been stronger. This year, it's all about center of culture, driven through music. We've got a partnership with Beyonce. We've got a partnership with different musicians around the world. Think Diljit Dosanjh in India. Think different influences in Europe, etc. Next year is about
maybe I can jump in there quickly. We'll ask about the music partnerships in a second. Just wondering, in terms of earnings, of course, an interesting thing is happening right now. We were expecting tariff clarity by July 9th. Now we're hearing from the White House it's going to be August 1st, and that won't be moved. But of course, you are on the lucky side that you have already reported earnings. Still, at the same time, you gave an outlook. You provided commentary about what you're thinking about the future. And you're doing that in an environment where we're hearing tariff announcements from the White House basically on a quasi-daily cadence. How confident and comfortable can you be as CFO to provide forward guidance at this point, given that the tariffs are still such a moving target?
Yeah, a couple of things give us confidence, Nina. Number one, the momentum that we're entering the second half. It's been sustained over the last 3 quarters. The second is our product offers. The consumer so far has been resilient. Our customers, our wholesale retailers, are still buying our product, especially our new product. And because we are a global company, international, for example, has been fairly strong. So as we manage through the uncertainty, we are trying to do it thoughtfully. We don't take anything for granted. Our view is you've got to continue to earn the trust with our consumers every day. And, especially in moments of crisis, consumers tend to gravitate to brands that are relevant and also, brands they trust. And, because we have been around for 170 years, navigated different crises. That's really been the genesis of why we think we can manage through it. We talked about the impact. We talked about actions that we're taking to mitigate that. And more importantly, we are doing different scenarios. I mean, yesterday after earnings, when we received news about certain tariffs, we went back and game planned that through another scenario. So we're working through different scenarios. The other piece that gives me more confidence is the agility of our supply chain and our teams around the world. And, let me pause here. I hope that addresses your question.
Yeah, Harmeet, you mentioned a music partnership that we, of course, all know, Beyonce, and this was a really major deal for Levi Strauss. I mean, you mentioned the brand being relevant. I was just at the Cowboy Carter concert on Friday, and I look around, there's Levi's everywhere. How influential was this partnership to the company, and how much of an impact did it have on sales?
Yeah, it's been really important. We have had a relationship with Beyonce for decades. She's an icon. She's in the center of culture. And we are just privileged and honored that she chose us for this partnership. It's had an impact. Our women's business is on a roll. We have doubled the business over the last many years. The partnership really accelerated there. We are nowhere near done. We think we can double our women's business. Our women's business is about a little less than 40% of our business. When I joined the company 12 years ago, it was about 20%. We think that our women's business can be about half our business. And I would say the partnership is important. Her styles and what she's wearing, you see the products right now on the screen. They're selling really well. Take the Beyonce hat. I was in Europe, early June, and, I was hearing stories of consumers wanting to wear and shop the hat and the product before they went to the Beyonce concert. They come to our store. We have store managers who have customized the product. Emily, who runs our store in Regent Street is a great example. And so, from my perspective, building and coming up with these memorable moments for our consumers is what connects us with our fans and makes a big difference.
We should note Harmeet Singh, who we're speaking to now, he's Chief Financial and Growth Officer at Levi Strauss. If you're listening on radio, he's dressed head to toe in Levi, but he's not actually wearing the Beyonce hat right now. So next time he joins us, he can shoot for that, Nina.
I'm sure he'd look great in it.
Yeah.
Harmeet, you talked about the importance of your supply chain. I'm curious to see what you're hearing from suppliers. We've seen about a 10% decrease in the dollar against major currencies around the world since the beginning of the year. Are you seeing any demands from suppliers to be paid in local currencies to not carry some of that currency volatility that has come with the dollar?
Yeah, no, we have tenured relationships. We source from about 28 countries. Relationships are deep, have been there for a long, long time. Currencies go up and down. There are times when the dollar is weaker, there are times when the dollar is stronger. So, and I think our suppliers, our vendors and our partners are used to that. So we're not seeing any pressure to change it into local currency because people have lived through, pieces. The more important thing is what goes into the production and manufacture. Cotton is a big piece, and cotton as a commodity has actually traded down, and that also helps offset some of the currency pressures. And because volumes have been a big piece of what's driving our growth, and we're thinking long, and and we believe we can sustain the growth at mid-single digit over a period of time. I think that's what helps us ensure that it's a win-win both for our manufacturers and vendors as well as the brand. And so I think that's how we're dealing with it, Nina.
So while Levi is focusing on direct to consumer, the wholesale channel is also growing, right? What kind of retail is specifically doing well for the company? Department stores or more so e-commerce?
Yeah, so it's the magic of the end. It's great to see our stores perform well, our e-commerce perform well, and wholesale. And, I mentioned jokingly within the company, it's a great trifecta on DTC. We're growing comp sales. We just reported our 13th consecutive quarter of comp sales growth. We're opening doors, so we're increasing our market reach. We have 3,200 doors right now. We're adding 50, 60 a year, and we're growing e-commerce in the mid-single digit. Beside all this, wholesale is also growing. And where DTC first really helps, Nora, to your question, our wholesale customers see the new product, which is introduced in our direct-to-consumer stores, see how the performance is doing, and in a lot of cases is working. And that gives them the confidence to buy into the product. So wholesale customers are growing largely because DTC is growing. They're seeing the product introduction. They see things working. And that makes a big difference. And also with our wholesale retailers, our relationships have been here for a long, long time.
Harmeet, we only have 30 seconds left, but given the tariff uncertainty, are you having serious discussions about moving any production or more production, or any production, to the United States? No, Tim. 98% of all apparel sold in the U.S. Is actually imported. So, that's not a conversation that's happening. We believe long-term the tariff uncertainty will clarify and settle well, where the consumer in the U.S., doesn't bear the cost of the incremental tariffs. And companies like ours, different apparel companies, continue to grow their businesses in the U.S. Harmeet, always good to see you. Thanks so much for taking the time and joining us on Bloomberg Businessweek Daily this afternoon. That's Harmeet Singh, Chief Financial and Growth Officer at Levi Strauss & Company. Also, Bloomberg News Senior Editor Nina Trentman. She's the author of the Bloomberg CFO Briefing newsletter. You can sign up for it if you haven't already at bloomberg.com/CFO Briefing.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.